Hello, welcome to this video. Let's do a quick top-down analysis and market review on USDCHF, that is US dollar, Swiss franc. The first slide here, the first chart here is for USDCHF on the 3-month time frame, whereby what we can see is a bearish market. We can see that USDCHF is bearish. We dropped down and we left some FVG here. There's an imbalance which usually act as a magnets, where the market usually runs to fill them before continuing its direction. So this FVG here acts as a excuse me. This FVG here is acting as an internal liquidity, whereby the market just came and filled it, and it's now going for the external liquidity that is lying low below here. This it dropped down, and after dropping down, you see it's being rejected down here, and that formed some. I believe there was some clear sweep of liquidity. Maybe you can see here. With this sweep of liquidity, with our bullish version of the standard trading model, this is how it represented. We got the sweep of liquidity, which we first sweep of liquidity, which you've got here. Then the first break of structure right here. The clearest one that we can see. Maybe this guy. I'm seeing this guy is the clearest. But looking downwards, its lower low, we take our entry right here, and yep, that is it. This is how I showed you how to draw this rectangle with this week, just taken this week of the sweep of liquidity. So it was mitigated, and we ride this market to the target. Where is the target? I believe the target is here. The target was met. We are inside now this FVG. Target is met. Then the market reversed backwards. Then again, it manipulated again. So after the target was met, there was a manipulation, and the market started reversing downwards. As you can see, let's drop down on the lower time frame and see what was happening there. This right here is on the 1-month time frame. The other one was on the 3-month time frame. This is just an expanded version of the previous guy. As you can now see, the first clearest break of structure that you can see is right here, and this guy, which we had marked in the 3-month, is still holding on. Yeah, so there was a 3-month FVG here also, which the market was going to fill before reversing up for this target. Yep, and I believe this there's a quick rush of the market from this high, this spike here, because of after the sweep of this liquidity, right? Yep. So there was a manipulation, target met, then manipulation a bit. The liquidity was swept here, and we can now see the market starting now to go for this external liquidity, because the internal liquidity, the 3-month FVG that was here, is already filled, right? So you can see after this sweep of liquidity, we got the first break of structure. It's high right here, ta-da. it was taken and the market rode to this potential target. This is the bearish version of our standard trading model, which is represented like this, which we said we need to have a sweep of liquidity. Then this first leg of the first break of structure, you set your order on its high and you potentially target this lower low right there. So that is exactly what is happening here. First break of structure, its high, the market rode and put this potential target. And we can also see here, this guy was sweep of liquidity, right? Then the first break of structure that is much visible is this guy. The market just came and boom, it finished our target. This is where the market delivered. Remember, this one is in the 1 month time frame. Yep. And this was way back at 2011. Now this strategy, this model is still worked during those days, right? So we came here. So for the last for this year, we have been revolving around this, I believe, this region. This is 1 month. This is December. We're here. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. We've been revolving around here for the whole of this year. So now this market is right here. What next? See this market now, after mitigating this this target. So we're waiting for a manipulation. You need to check this lower low. So you mark this one, this lower low, as a potential draw on liquidity. The market is gonna draw on there very soon. We can also see that see when it was going up, there was some liquidity that was taken here, around this guy here, and this guy. See this? There's a wick here. Okay, they will draw in form of a rectangle as I showed you. Yep, this is what I was saying. So this week you draw your rectangle, and there was a liquidity right here, so marked with this dotted line. Then we said this is the potential draw on liquidity. After this target was met, right? This target was met from this high, first break of structures high. We have to manipulate first, take this low, and maybe potentially take this other one. This one is also a very high probable draw on liquidity. Before now we can start to reverse up. Yep. Or else we go to this place. Okay, we can go to this place and now come to check this lower low. This lower low here. There's no anything can happen. Might even come like even straight to check this guy. But we'll just watch what the market is trying to do and see what next. This one was on the 1 month time frame still. Let's drop on the lower time frame and see what was happening here before this market started moving downwards. This now is on the weekly time frame. This is just an expanded version of that rectangle on the monthly time frame. This is the liquidity that we're saying that was swept. But the clearest one is this guy here. This guy here, which is even the clearest first break of structure. See all these guys here. First break of structure. This guy here is also, but not that very clear. First break of structure. Yep. So he came and took this liquidity Then on this the market can mitigate this rectangle here, which I showed how to draw. Then now after mitigation of this side, how now do we take an entry? We wait for market structure shift and the first break of structure, and you take your order. So your rectangle should be drawn around this place, and wait the market to reverse back. So let's drop down on the lower time frame and still see what was happening. This one now is on the daily time frame. This one is on the daily time frame. This is a rectangle that you just try to draw on the weekly. Now we can see very clearly after this guy was mitigated up there. We can see the clearest first break of structure that you can see is this guy here, and it's high right here. This is where you set your order and write the market to the potential target right below here. This is the bearish version of our model. Yep. So a sweep of liquidity, which we have right here, a first leg, first break of structure, which we have. This is the first leg, as you can see. This is a sweep of liquidity, then a manipulation here. Then, first leg, first break of structure, it's high. That's where you take your order. This high here, and target this potential lower low. This right here. The stop loss above here. Stop loss above here. But that one is too much. This one is on the daily time frame. Yes. So, to take a trade here, you could have now dropped. If you drop down on the lower time frame after the sweep of this liquidity, watch for the price patterns around here. Watch for this is bearish standard trading model, and you will get an entry with a tight stop loss to operate on and target the nearest liquidity just around here. This is the place where you could have left the market right here. Yep. You can even take partials right there and leave other monies to reach for the target. Dropping down on the lower time frame, and let's see what was happening. See the clearest first break of structure. This was manipulation. This is right here. Then the market rallied up. This is the clearest lower low, where the market was reacting off. But dropping down on the lower time frame, you can also see this guy here. Also reacted a bit, but this one was a very conspicuous one. Let's write this guy. The downward time frame, still on the downward time frame. This is what was happening. Right. Okay. After the sweep of this liquidity right here, ta-da. Then we can see this market is reversed around here. So let's see what was happening at the sweep of this liquidity. This liquidity was around somewhere here. So there was a sweep of it, then a manipulation on top. We came this place. Yep, but we took this one also. So that is where I've marked the rectangle. This one is in the 4-hour time frame. So with this sweep of liquidity, our bearish version is supposed to be drawn like this. Like this. So after the sweep of liquidity, then first break of structure, it's high. This is where the order is supposed to be taken. And the target this lower low. But you can see the sweep of liquidity of the clearest first break of structure that you can see here on the 4-hour time frame. is this guy, and its high is right here, which the market didn't sweep, because it is the market was literally strong bearish. Yeah, was in a strong bearish. The bears were very strong to take that high. So we came down here, we swept this guy. So we swept, then we manipulated again. After the sweeping of that guy, see this one was the first break of structure. This lower low. This guy here. Ta-da! I believe there were some pips here. Dripping down on the this is a bullish version. We drop down on the lower time frame. Okay. So dropping down on the lower time frame, what we can see is this guy right here. This is the guy. But this one was a bit of risky. This space, there's a risk here was big. Yep. So we can see this lower low was triggered, and the market rallied up to the nearest liquidity, right here. Yeah, and for those ones to ride with the trend, because this one was an idea of riding against the trend. Yep. But you can do always whatever you want in this market, because I heard someone saying that the bulls make money, the bears make money. It's only the peaks that get to lose, that eaten. So it doesn't matter whether you're riding the bearish, whether you are riding the bearish on a bullish market. You can also make money if you know what you're doing. But if you don't know, it's advisable that you just stay away from the market if you don't want to ride with the trend. So to catch the continuation, for those who wanted to catch the continuation, this one is in the 1 hour time frame. It's a bit good. So there was a sweep of liquidity here. Yep. And the first break of structure that you can see is right this guy here. Yeah. The bearish version of the standard trading model. Break of structure. It's high. That's where you take your order and potentially targeting this lower low. So there was a sweep of liquidity, which we said we should have here. Then the clearest first break of structure that you can see is this guy here. This guy here. Then it's high, set your order and ride to the potential target. And that's just happened there. This guy is where you set your stop loss. Ta-da! We came and mitigated the guy. So that is exactly what was happening. That was exactly what was happening on this one. Was on the week on last week on USDCHF. No, this week, right? Yep. And you can see this low has been taken, or not yet. It has been taken, and our draw of liquidity. Expecting that market to take a low that we just indicated here. We're expecting this guy to be taken and potentially taking this lower low before we think of any other thing to do on USDCHF. Idea of doing analysis on USDCHF, though I don't trade it. I was going back through my library, and I was fascinated to see analysis that I did on September 10th. This was the analysis. on the 1 month time frame. This was the analysis that I read on the 1 month time frame. It was a little bit crazy, and this is it. I don't know whether I knew what I was doing. First break of structure is lower low taken, Tara made. Then there was a sweep of liquidity here after the manipulation. That is it. I don't know if I had that explanation. Then first break of structure, it's high, take your order there, then target Tara. We can also see here of the sweep of liquidity, first break of structure, it's high. Yep, then target Tara. This is the pattern. This one was on the red on September 10th. And now, this was my prediction. I had another download on it. This was the prediction that I made during September 10th, right? We expect this market to come and fill this. There was an FVG here on the 1 month, right? I get here and come take this lower low before we go up. But what has happened is just this market has come up here and taken this liquidity right here. And now it is going for this lower lows. Yep. So it is just that. Yeah, so this is USDCHF. US dollar, Swiss franc. USDCHF is also it moves in the same direction as DXY. They are positively correlated. So I heard once a guy saying that once you are a trader who depends on DXY as a way of trying to find out what the dollar pairs currency are moving, because DXY is negatively correlated to most dollar pairs currencies. So you do analysis on DXY. If it's not that clear, you come to USDCHF because they move comparatively the same. Yep. So your analysis on USDCHF are opposite for the dollar pairs, right? For the dollar pairs on the second side. Like euro is, this one is USDCHF. USD is the first currency, and CHF are the best currency. Now the Euro USD, USD is the best currency. So these two currencies are oppositely correlated. When USDCHF is moving downwards, when it's bearish, then the Euro USD, GBP USD, NZD USD, AUD USD, they are bullish. They are moving up. That's the idea of negative correlation. That is what I just had for today. I know it's been a long video, but if you just gotten something, you can like the video or comment on what you just gotten from this video. Share the video if you're new. You can also subscribe. Comment on what you want me to talk about on these markets. And you can subscribe to the channel. We want our family to increase. That is it. That's my prayer. I hope you're making money in the markets. It is a holiday season, and it is good to take care, to take caution. That's what most people say. But so far, last year, I've been on the chart in December, but it was a bit hectic, though I didn't know what I was doing during that time. So I was just following the charts like that, and it was hard for the guy who was I was following his strategy. Yep. And I remember the guy used to do his analysis and taking trades on the higher time frames. On the list was on the 1 hour time frame. That's where he took his all of his trades. But during December, she was convinced by other people, by the mentors, by other people, his followers, that she should try use the lower time frames. Then she was able to drop on the 15 minutes and 5 minutes time frame, and he was saying, hey, wow, yep, that is it. He started using the lower time frames to kill the markets with it, to kill the market with the lower time frames. So I don't see, so far I've not seen this market during crazy things that I might maybe say I won't trade on during this December seasons, holiday seasons. Yep. Yeah, but it is an issue of risk management. If you know where to set your stop loss and you know where to take your profits, yeah, losses are inevitable. Yeah, if a trade hits you, my stop loss, then it is what it is. I go check back the setup and see what's happening with the setup. That is exactly what I do. Thank you so much for this one, and trade safely, trade cautiously. Bye. See you next time. Thank you.